right, welcome everyone. Welcome back to the 5ers Live Trading Room. It's Monday. I hope you all missed us because I've missed you guys. All I've done is basically, from the last Wednesday, all I've done is just pretty sure there's someone in the background called Alex clicking things, making sounds. Victor, how are you doing?
I'm doing fine. Welcome, everyone. Welcome, beautiful people of our trading community. I have lots of excitement for this week. How about you?
No, man, today we got a very exciting episode today. We got Tom, the OTE Trader. He's a 120K funded trader here with us at the 5ers. He's going to be on here in the first half of the live stream, talk about ICT concept. I got a few questions to him. I want him to talk about, let's leave it for the actual discussion. I'm going to bring him on. Well, actually, I'm not going to bring him on just yet because I can see him in the background and it looks like he's talking on the phone. And apparently, he told me right before going live that he has like 1 pip away from getting another 100K funded account. Maybe that's the market makers calling him, letting him know that they're about to give him that extra pip. Guys, let us know in the comments if you are in any positions. How's your trading been going? All right, are you ready to get on? Tom, I'm gonna bring you on. Is that cool? Nice. All right.
Yes.
Welcome, Tom. OTE
Joe,
Trader.
what up? What up? I'm good, man. How are you guys?
We are good. We are good. You told us right before going live that you were about 1 pip from getting another 100K funded account. How's that going?
Yeah, it's edging my take profit. My bell is going off right now that it should take TP, but the spread is not taking my trade right now, so should be any second now. So it's like literally at 9.9%, but yeah, surely 2 pips in the next minute.
What pair is it on?
It's GBP CHF. So it's an exotic for once.
Wow.
I love to trade majors, but as there's no news today, no USD news or anything, so probably not too much volatility on majors. I think you know
what? Let's bring up the screen. Let's bring up the screen, and we'll see that TP getting hit together. We'll celebrate that 100K account together because it looks like it's.
I mean, it's a phase 1, so it's not yet.
Yeah, it's still.
Yeah.
It's still you're still passing phase 1. It's a big thing.
Let me just see if I can share the screen.
I'm looking at the screen right now, and it feels like we're trading at resistance. So with massive, if you're massively unlucky, it could be a problem because you're right at resistance. But we'll see. We'll just need a very, very small push it upside.
Yeah. Let me see. I think my screen should be able to.
Yes, we can. Should be able to pull it up here. Yeah. Perfect.
Yeah, so I literally need this was TP already, but the spread did not take my trade, so I have to wait, I guess. Of course, it will retrace now, so that's how it always goes, just before TP. But yeah, 115.04 was the take profit, but it's retracing right now, so it did not hit. Now I have to wait again.
All right. Okay. That's close.
Yeah, it's fine.
Is this with the 5ers or another firm?
No, this is with another firm. I took it on the 5ers as well, and on FTMO as well. So I took it on 3 different accounts. So hopefully they all push up higher. And I honestly, yeah.
Now that you're, with being a profitable trader today, with all these funding firms out there, it's just such an amazing opportunity to make some real money with, and you don't even have to invest your own capital. All you have to do is just get the evaluation. It's quite an amazing time to be a Forex trader.
Yeah, it's amazing because when there were not too many prop firms around or not as known, you typically would just trade your live account, right? And most people start off, I don't think even more than 2,000 euro or dollar when they start out. And you can't really make a living of 2,000 euro on your account balance. You can make a nice little extra income, of course. But if you want to be a full-time trader, I think you should have at least 20 to 40,000 in a trading account, live account at least.
Yeah, I said, someone wrote something interesting on Twitter or X. You know what? I'm never gonna get used to calling it X. I'm just gonna call it Twitter. But anyway,
Yeah,
someone
same.
someone wrote on Twitter that the discussion about having a personal account versus having a funded account, and someone says like, well, if you buy a funded account with let's say $400 and you trade that, and then you take that $400 and invest in a private account, obviously you're never going to be able to make the same amount of money. So if you look at it from that perspective, it's just really blessed to be able to have the opportunities that we have here. I want to just one quick thing here. We have upgraded we got the new hub on the 5ers. We just released the new hub, the 5ers hub, and yeah, the new dashboard is really looking good. But make sure you guys understand we're still working on it. There's still some few small bugs, but understand that it just got released today. So if there's anything small, is to know that we are the people in the office are working tirelessly on getting everything fixed as soon as possible. I just took a look at it and it looks absolutely amazing. Very cool to have a new look.
Nice.
All right, we're looks like we're on GBP CHF. We're kind of pulling back on the very low time frames, but the local trend is very strong. So I think we're probably going to get that pushed up. So I don't really see any reason.
No, I got scammed right now because it hit my TP. The MetaTrader flashed yellow, so it cannot fill me. And then it filled me 3 pips below my TP. So I still have to.
Oh, wow.
I'll just leave it. I think I got filled on the entry on a bad price as well. This firm is not. I don't like it at all if you compare it to the 5ers. 5ers had like the tightest spreads and the nicest executions. This firm just, when I entered down here, it filled me 3 pips higher than when I pressed the buy button, and that's including the spread. And now it fills me 3 pips lower, while it went above my TP as well. So I'm not a fan right now. I'm kind of
that's. Imagine if you're scalping with that type of slippage. That's going to be a huge problem. Obviously, you got spreads and slippage, and that's going to be a problem. I never had any problems with the 5ers though, but
same. Always get filled very nicely. Yeah.
I hope it's an incident, Tom, because otherwise it's. Your execution is very important, right?
Yeah, of course, and you don't want to get slipped on your entry or your stop loss or your TP, right? So yeah, it's kind of annoying that they did that. Now I need to make another 0.2%. It's not much, okay, so it's okay, but I would have liked to pass it now, and then go on.
I think this is in a scenario where a lot of people will give back all the profits because you're so close, and they're like, well, I just need one small trade, and they open a trade that's not the best, and that's going to be a loser. And they're like, I got to make that back, and I get a little bit extra, and that's a loser as well. And it's just becomes this roller coaster of just you're giving back all the profits.
Yeah.
We get a question in the chat about the firm that you're referring to, but obviously we don't want to mention, like, we don't want to talk about other firms in here. We want to stick to what we're doing, and what we're doing is giving you guys the best execution, the best spreads, and the best possible trading conditions. And honestly, you can compare it to any other firm out there, and we are simply giving you guys the absolute best trading conditions. And you can ask any of our funded traders to confirm that with you guys.
Especially the spread. I mean, the spread.
And here we go. What's up, Alex?
Yeah, buddy.
Hi, Alex.
Light work. There you go. Tom is there smashing out massive trades like that.
Yes, sir.
You need a new firm though, man. You can't be getting slipped like that on.
Oh man, I'm so annoyed. Yeah.
Wow, you were so happy about the one pip to pass, and then
and the crazy thing is I even let it like 2 pips above the passing, so it's 8.1%, and then it still fills me at 7.8. So okay, whatever,
There you go.
That sucks.
Yeah. Where I just got a couple of questions first, because we're in. I'm actually in. What am I in? USD CHF. I see you in pound CHF.
Yes.
Tell me a little bit about why you decided to go into pound CHF, how you found, obviously, because I'm taking you're scanning a load of different pairs to see which one is the most volatile.
Yeah, this one is actually pretty nice. If we I need to kind of go all the way from higher time frame to lower time frame.
Mm-hmm.
So let me just remove all the drawings, and then I will remove this one as well, so it's looking a little bit nicer. Right, so we start off on the monthly as always. And I'm looking for, what is this monthly candle most likely to do, right? Is it more likely to trade higher or lower? And for me, instantly, this looks like we're going to go higher, because we're about to form a swing low here as well, and we have a breaker block over here. That's a ICT concept kind of thing. So monthly looks bullish. Then we go to the weekly. Then on the weekly, we have a swing low here in this back down close candle. So this is a big bullish order block. We are not closing below the 50% level of this order block. So that indicates for me it's still holding. I don't like if it closes below 50% of the body. And then we formed a swing point over here. So we close back into this candle's range. And now the next few candles are looking to trade towards this high of this first candle here. So that happened already last week. But this week we can look for continuation, because the drawn liquidity is into this high. So I should only look for buys. Now, if I go to the daily, we have a nice push up over here, right? Then we have an area where you can go bearish from, which it did not. So we can use that area as a reference point that we can go bullish from. So typically with ICT concepts, you want to sell in a fair value gap. So we've got a nice fair value gap over here. Price entered into the fair value gap. Looked like we're about to reject it here, but then we closed above those down close candles again, those bearish candles, which means they're forming another bullish order block over here, and then they push it up again. And because they're leaving gaps behind over here, that's also an indication that they're more willing to push up higher rather than lower, because these imbalances tell us they are pushing it with force towards a target. Now, for me, on the daily, that makes sense. I always look for a cracking correlation, which means I will compare two assets with each other, see which one does make a lower low and the other one does not make a lower low. Now we have a crack in these two assets, and that makes it higher probability for me that it will trade towards that area. So now we here have a little fair value gap over here. If I zoom in a little bit, right? So this was the key level I'm trading from. This fair value gap over here. Now, a key level, we need to use it in discount. But if we look at this entire range here, it's not in discount. I think I talked about this previous stream as well, that I only buy in discount and premium and sell in premium. But this is in premium. So why would I want to be buying this while we are in premium? Well, we actually got to go to the 4 hour for this one, because does it make sense that the 4 hour time frame goes all the way back down, goes through all these candles here, and then hits that discount level on the daily and then goes up again, right? For me, that makes no sense, because we're trading with this 4 hour range over here. So as long as we respect this range we're trading in, from this swing low to this swing high, we can tap into a discount level, and there's that daily key level as well. So from this area, I want to look for another cracking correlation. So if I split up the screen, and sorry for the guys that don't trade ICT concepts, that might be a little bit a lot of information what I'm just putting out over here, but this is basically what I'm looking for. So let's see, we've got this low down here and this low down here, and then the same lows are down here but up here, right? So we have this low getting taken out on Euro CHF. These are the two correlated pairs I'm looking for a cracking correlation between, but it did not take out the low here on GBP CHF, right? So now we have a cracking correlation, which makes it higher probability that we're going to trade up higher. Basically, I entered based off this fair value gap, so I put my stop loss below it, so around 20 pips or something, and yeah, we're up like 2.5 or 3 hour. And you can go into the lower time frame if you did miss the entry here. You go to the 1 hour. Let's go to the 1 hour. So we have a key level. And remember what I said, right? We want to see those bearish candles. We want to see that be used as support to trade up higher. So we actually closed above this set of down close candles. So once we close up here, you have a change in the state of delivery, which means we're going from sell side or bearish order flow. We're going to go into bullish order flow because we're disrespecting these up close candles, and we're closing above down close candles, but which will be used as a support. So if you missed the initial entry down here, which I took, you could have also gotten in with this wick down back into the order block. Then you put your stop on the order block, and then you should be golden to go. And yeah, that is basically what the entire framework was on this position. And we
Yes.
actually
I think this is a very interesting breakout, and I want to show something on GBP CHF as well, because I've looked at the exact same trade with the exact same levels and everything, so it's super interesting. So maybe we can compare the two type of
Yeah.
analysis. I know last time you were on last week we talked about having you on and then looking at my type of analysis and then talking about what some of the ICT concept that we might see on the way I'm trading, and I'm
Similarities.
slowly starting to understand. I'm slowly starting to understand here what's going on here. But I made a plan this week, and so every trade I take, is based on my weekend trade planning. So when I looked at the markets yesterday, I looked at this and I say that there's a support level down here. I like this support level, and interestingly enough, it's also a fair value gap, right? This candle, this gap creates a fair value gap, and so it's fair value gap, and it's also confluent with a good support area. And what I saw was, I had an alert right here, so it alerted me that price. We also had a nice gap down as well on the open, but price alerted me that we had an alert testing that support level. And what I did then was I went into the lower time frames, in this case the 1 hour, and I broke it down in the exact same way as you looked at it, because what we have here is we got that resistance right here, kind of like that, and that's confluent with that high. So if we have something like this, then what you call a change of delivery would be, in my case, just a break of market structure. It's a break of structure for a retest of that level. So it's basically, the higher time frames, high time frame level. We confirm the retest. We confirm that we now tested the correct level. Now, of course, if I could have gotten in here, this is where I wanted to enter, because that's the best entry point, right? But if we break and retest that level, that creates a break of structure. And what happens was, that wick that you marked out comes down and tests these highs for a break and retest perfectly. Can put if I want to have a wide stop loss, I can take trades that are half an hour or higher, which is up to these highs, or even here I have a 1 hour, and then it gets filled right there. So I think this trade right here is just a beautiful example of, how the things I look at as just a break and retest of horizontal levels. At least this trade here, we can combine the fair value gaps and also that what you call the change of delivery.
Yeah.
What I think is very interesting though is you talk about that crack and correlation. I haven't really understood fully what that is and why it's important. Maybe you could break that down. And this example here, for example, why do you look at Euro CHF for that crack and correlation, and why is that important, and why does that add confluent to this trade?
Yeah, so basically, with ICT concepts, we have a thing called smart money technique or smart money tool. So that means that crack and correlation. But why is the crack and correlation important? Because as ICT or the inner circle trader says himself, that's when when smart money is in the market and playing with these two assets. I don't know how much of a truth that is, but it works a lot of times. So should be some sort of truth to it, but they crack the correlation between those two assets, and we're using Euro CHF and GBP CHF because we want to have the same ticker, so we have the CHF in both of them, and then we pair it up with either a Euro or a GBP because they are closely correlated as well, and then we can use that as for the cracking correlation. And I love to use Euro and GBP because I also analyze Euro GBP because this one is currently bearish, which means the euro is weaker than the pound. So that's why I went with GBP CHF and GBP CHF, because the pound is stronger, and we're looking at a weak Swiss franc. Now we have a strong asset and a weak asset, and that will cause for a very good move up. So that's why I picked GBP CHF based on that.
Nice. I want to ask you about the OTE, the optimal trade entry. So the optimal trade entry is a specific zone within the Fibonacci tool, isn't it?
Yes, it is if I pull it up, right? You always want to put it on a range high and a range low. I'll just take this one. The range high has not formed yet, but I'll just do it for an example. And then if I use this, then we have these numbers over here. So the 62 is like the a sensitive area where price can reject from. I think a lot of other different concept traders also use the 62 level if they just use the Fibonacci. The OTE is the 705 level, so that's the sweet spot. I used to only trade this. That's why I'm called the OTE Trader. So my username is a little bit outdated because I use this, but I use a lot of other things as well, which are more important than this. However, premium and discount is most important as well, so that kind of lines up with this area. And then the 79, you typically don't want to see that get exceeded because it's more likely it will run the low afterwards. As long as the bodies close within this area, I think it's still good to go. It can wick lower, but the bodies need to close within this area. So these are the OT levels. Yeah.
That's actually quite amazing because I've been teaching a concept called the RL SED, and I've been doing that since like 2017, and it's like it's incredibly how when you describe this, it's basically the same thing. It's just that instead of using the 0.62, I use the 0.61.8, which is basically the same, and I use the 0.702, which is also basically the same, and the 0.786, which is also the same. So it's basically the OTE is the same area as the reload zone, the RL said. And when you say the candles have to close, like I ignore the wicks, if there's like perfect reaction to the levels with the candle closes, that there can be wicks below. That's the exact same way I'm trading the reload zone as well. So that's just, this is something I can't believe I haven't figured this out before. But that's why a lot of people, when I show a setup where I'm entering within the reload zone, and a lot of people point out that, well, that's actually an entry inside the OTE inside a fair value gap. And I've seen now that most of my break and retest trades are like the best ones, and this is where it becomes interesting, and this is what have kind of confirmed to me that there's definitely some edge in the the ICT concept, because my best trades are when I enter within the fair value gap inside the reload zone, and in this case the reload zone is the same as the OTE. And when ICT traders talks about a change in delivery, that's what I call a break of market structure. Basically, you go from lower lows and lower highs to a higher low or whatever. So it's very, very interesting how.
So you're basically saying you're a believer now. That's what you're basically saying.
Well, I'm not. I'm a believer. Listen, I'm a believer in technical analysis. Okay, technical analysis works. Now, what I'm saying is what ICT has done is something that he has taken these concepts and he has created very clear rules around them, and he has packaged this in a very nice way and said this is what it's called, and this is when you see a FVG or fair value gap, these are the rules behind it. And fair value gap is actually quite smart, because when you have a fair value gap, a good fair value gap that's also confluent with high time frame levels is usually a very good horizontal level. And it just creates a rule-based system around finding strong, fundamental technical analysis ideas. I think it's very clever, and I'm starting to understand why a lot of people are drawn to ICT, because it's a it's a
I
model.
think this viewer has a very valid point. It says ICT is just like another language, very based on Wyckoff.
Yep.
And I think there's a lot to it, because like the OTE, you see those resemblance where how you trade, Jonathan. You don't use the same words, the same terms, but it's basically the same with little variation. And actually, if you think about it, we're trading the same price action, and we just approach it a little bit different using either, in my case, order blocks, in someone else's case, maybe EMAs, but we're looking for the same thing, right? Market changing, market shifting, or breaking market structure. And it makes a lot of sense that if we're trying to catch the same thing, we will be reading and reacting to the same kind of phenomenon, although we may describe it different with different words and terms. So it makes a lot of sense to me.
Yeah. One thing I wanted to just ask Tom, because obviously it's the start of the week. It's a Monday. You're obviously not just jumping in on a Monday, just opening trades randomly. You obviously do a little bit of homework before.
Yeah.
You're obviously looking at the markets to get yourself ready for the trading week. What are your habits? What are you like looking through on, let's say, on a Saturday or a Sunday to get yourself ready for trading this week?
Yeah, first thing I do, I look at the economic calendar, so I see what type of news events are there coming up. Because if I'm not aware that there will be some sort of high impact news event, and I start trading, either you get violated on a funded account or something if you're not looking at those economic events, or you get surprised by let's say there's CPI and you're not aware, your account can be gone if you're not if you're not paying attention. So I look at the economic calendar first, and then I just scan through all the higher time frames. So I have a big list over here. I don't look at all of them, but I start off with DXY. So I go to the daily on DXY, see what's going on over here. It's completely blank right now because I'm not interested in DXY, and that has to do with the economic calendar. Because we have a lot of news, and I really want to trade after all those big releases are in. Because we have Mr. Powell, from the Fed speaking, and if he speaks, he says good afternoon, and price goes up 200 pips just by saying good afternoon.
Top P, that's what we call him, top P.
Yeah, he's crazy. So I'm not really interested in dollar pairs until he's done speaking. And I think Wednesday he speaks another time. So tomorrow and Wednesday and Thursday we have CPI, if I'm not mistaken. So yeah, we have CPI on Thursday. So I want to trade after CPI on Thursday for the dollar pairs. And in the meantime, I just stick to exotics. So I go through the daily time frame. Obviously, I run a Discord as well. So I call my dear friend, the MMXM trader, who is very known in the ICT community. We discuss a little bit what we're gonna do. See if we're in line with the same bias, because most of the time if we discuss together and we have the same bias, like 80 or 90% of the time it just moves in that direction. So we use each other as an indicator, so to say. But yeah, and then we'll just look how the candles close on a particular daily time frame. And I can pull up like this one over here. That's what the MMXM trader posted in the Discord, that he wanted to look for that daily level, which I outlined earlier, right, on GBP CHF, that daily level here. He wants to see price go higher from there. And obviously I updated intraday what should hold and what should not hold. And that's typically what I do starting off the week. Higher time frame, economic calendar, and yeah, I don't think it needs to be more complicated than that, in my opinion.
Nice.
No, I think at least as long as you have a plan, right, is something to.
Don't go in without a plan. No, don't.
Yeah.
Yeah.
So Tom, do you at the end of the weekend, let's say you discuss those pairs that are setting up, do you have like a short list? Do you then choose which one you will be trading Monday, or you will have still all of the 28th pair available for you, or will you be making that that list shorter on Monday morning?
We typically only focus on the highest probable daily expansion. So if the daily time frame is not looking good and it is not hitting a key level, let's say if I go to let's just take the example of today. If today price did not hit this key level, or just hang around here, and then we are not interested because there's no higher time frame level hit. So we'll be waiting for that. And it all depends. Yeah, it definitely all depends on how the daily is looking. Let's say the daily is looking like this. We know to stay out because it's most likely just going sideways. There are no fair value gaps created anywhere to take a trade from. So I like to have quality setup, and higher time frame key levels definitely make a short list. So for this, normally I don't trade Mondays, but if there is a setup possible on a Monday, then I will take a look at it. because I like to skip Monday most of the time to see what the weekly candle starts off doing. So sometimes the weekly candle starts off going down when we are higher time frame bullish. Then I know, okay, we're probably in a manipulation phase, which is going lower to grab the lowest price of the week, and then we'll look to trade later during the week. That's why I typically wait for Monday to pass, and especially if there's no news and everything. For the dollar pairs, I did not expect much, but I think they actually did move quite well. No, not really. It's kind of sideways anyway. But yeah, the exotics definitely look better.
So basically, your first step is you need daily imbalances before you can go, for the next step.
I prefer an imbalance, yeah, but it could also be an order block. Let's say if there's let's say Monday created the down close candle. This is Friday, and let's say this was today. Today closed like bearish like this, and today we close above it. Now I can focus on Tuesday. I want to see the next candle trade back into the down close candle on the daily, because now we have a key level here as well. It doesn't necessarily has to be a fair value gap, but an order block or a breaker block could also be used. So it just has to be a key level.
I see. Well, nice.
Yeah. What kind of concepts do you trade actually, Victor? Because I have not seen your style. I'm kind of interested.
Yes. I use order blocks. I don't make any distinction in between breaker blocks. Actually, to be honest, I haven't. I don't know what ICT teaches as breaker block, so I don't know exactly what it is. But I don't use it. What I do is I use. Yes, I've seen that. What I do is what I do is let me show perhaps what I do is I would look at order blocks, and I have done some statistical analysis to which order blocks are the ones more likely to be reacted upon. And I have some concepts that I use, like freshness of the order block, and if it's within a structure, a quasi structure. If it is one, and I have little rules, but basically I use quasis and order blocks, and I have rules to eliminate or to increase the likelihood of the order block being the one that reverses price. And if I am, the quasi is just the Quasimodo. So basically I'm looking for the same thing that Jonathan uses as the breaker market structure break, and you call it, I believe you call it price of delivery, something like that, change in price of delivery, right?
Yeah.
When it goes from one order flow to the next one, and it's basically the quasi. What you guys are describing is what I describe as quasi, which is where you have a trend, and it makes a higher high instead of a lower high, and then comes back into some kind of a discounted area before it continues to the other way, a reversal pattern basically. But I use the Quasimodo with the order block, and with some nuances to filter out the good trades, the good setups, and the not so great ones, using of course top-down analysis from the monthly all the way to the 1 minute.
I see. Okay, interesting. So yeah, kind of. Even though we use different terms, we're all kind of we're looking for the same thing most of the time. We're all buying in discounted levels. We're all using certain type of candles that are deemed an order block or an OTE level somewhere. So it's kind of interesting.
Actually,
it's very interesting.
Yeah, actually, one of the things I do is I measure this leg, and I need to be buying. I don't call it discount, or I just call it I want to be buying. When it's beyond that 50% retracement.
Yeah.
Right.
Yeah.
But it's some other may call it. I think this is discount, right? Discount or premium, but it's basically the same. It's only the change of terms, but it's different approaches to reach the same goal, basically.
Yeah, definitely.
I read that so wrong to start off with. But
wow,
yeah,
Alex,
the
wrong place.
No, sorry, man. What? I got it wrong for a second.
I have a question about entries, because when it comes to entering a trade, for me, I'm quite specific in what I want to see. I would like to see an engulfing candle or a pin bar, and I can't really describe it exactly, but I when I see it, I know exactly that this is my entry. So do you have any specific rules for waiting for confirmation, or do you put in orders before the level is hit? You know, what's your approach with entry triggers?
So I typically don't do limit orders. I used to do them when I traded OTE, because you just want to sell from the OTE levels, and so you can just put in a limit. But I like to see if I'm on the right side of the curve. That's kind of because then it delivers faster, and you don't have to sit through drawdown. So what I typically do, let's say the GBP CHF from this morning, I wait for the ski level to get hit. I actually went into the 15-minute, and I saw a swing point form, which means you have candle number 1 here, and then the next candle closes back inside the range of this first candle here. So now the third candle is more likely to deliver into the high of the first candle. So I will just enter here, even though there's no break of structure or anything here. But I still will put my stop loss down below the key level, because it can dip in here one more time. Then at least I have some safety, you know. But I like to see a swing point form in a key level, and then I try to trade when I'm on the right side of the curve. And obviously I will monitor the trade, as I did over here. This is a bearish fair value gap. And once we exceed this bearish fair value gap, because that should hold if we're bearish, so now we're seeing a disrespect of the sell side of the curve, then I can just chill out a little bit, you know. So because I know now most likely this will deliver to the buy side. And even you can even look for another entry if you choose to do so, right? And then on the 1 hour we close above these, like I explained earlier, right? And the same thing you were looking for. You could scale in another position over here. Yeah, I think this will be this will be a massive runner. I think you can hold it all the way up into the highest part of this candle here. So this still has like another 80 pips to go. So if you're still in, I would say hold, and I'm holding as well. And yeah.
CHF seems a little bit weak. I actually probably did the little bit of the mistake is actually going into a weaker currency against CHF, and I got in a little bit late. I'm actually just like the moment here on USD CHF. I saw obviously all of this consolidation, and then you've got this massive kind of gap where I'm looking for a return to the mean type of trade, and that return to the mean obviously is the 200 EMA on the 15-minute. But again, what I'm going to take from you, to be honest, Tom, is the fact that you've gone through and seen which obviously pair is more stronger out of everything. You've gone through, you've seen USD isn't strong. You've gone and you've seen which out of euro and pound isn't strong, and then you've taken the strongest and then you've put it against the other weakest, which is something that I don't do. But when I saw this kind of price action with this consolidation, a break above consolidation, a retest, normally I would prefer to actually get in on a 50 fib. So I'd normally take it from the top to the high. There you go. You got the 50 fib, and then obviously I'll take the TP to the next point, which was a 200 EMA. But
I think you should still be good. I think you should still be good.
No, I think it's still good, but the fact that it could have been a lot better trade if I had the strong pair with obviously the weak pair, which is something that I'm definitely going to take from you, from what I've just seen that you do. So that's a nice bit of what's the word, guys? Somebody help me.
It's like a confluence, you know, like
technique. There you go, nice technique.
Yeah, we call it cross-currency analysis. So that means we compare all the assets together, like which currency looks the strongest at the moment. And we will always want to pair up a strong one with a weak one. If it's not really if they're not really strong or weak pairs, we try to find the strongest one, and you can also pair it up with one that is like medium, like consolidating. Let's say the pound is consolidating. You can actually use futures charts for this. Yeah. So you can. I don't know if my screen can be pulled up. I can just show an example. So this is the daily chart on the futures, and they are all backed against the dollar. So this is just an inverse chart on the dollar. So if you have like this is the yen futures. So this is basically USD JPY only reversed, right? So it's nothing fancy. But if I look at the euro, for example, it looks like it is pushing up. If I look at the pound, it's looking very bullish, right? Pound is definitely bullish. Then I look at the JPY, it's bearish, right? It's going down. So I can already know without looking at GBP JPY, this one is pushing up right now, right? Because they are, you can pair them up, you know already, you don't even have to look at GBP JPY, you know it's going up. So when I see a strong pound futures and then I go to the Swiss franc, I could have, it was maybe better to long GBP JPY, but I'm kind of scared to trade JPY pairs because sometimes you have some random 20-30 pips spike out of nowhere because the
interventions and things with
the interventions, so I tend to not trade JPY pairs because of that reason. But yeah, the rest all look like bullish, right? I could maybe trade GBP NCD should also go higher if I'm not mistaken. Yeah, that one could also be traded, but I don't know. CHF looked a little bit better.
I'm curious to for you to look at. I'm sorry if I'm interrupting, or did you finish that? Yeah, okay, perfect. So we got NCD CAD. I'm currently in a trade on NCD CAD. So I would love to see you break that down, and we could perhaps see if we have the same idea for this.
Right. If I would analyze NZD CAD, it's probably a pair I would never trade because I don't like to cross them like that. I always like to use a euro and a pound. But let's just break it down. We have a monthly fair value gap here, which is a bullish area where you can go bullish from, right? So the monthly to me looks like it took out previous monthly low, dipped into an area which is a key level, and this looks to go higher on the monthly. So now I know, okay, monthly is bullish, more likely than not. Let's go to the weekly. What happened on the weekly? We also hit a fair value gap over here, and we closed in some sort of a swing point right now, which means we want to go for this candle's high. We did not take it out, I think. No. So this candle's high is still intact. This is the first candle over here. Obviously, the week needs to trade lower first to catch a discount level. So let's go to the daily, see where we are. Yeah, so we had a massive expansion on Friday. I guess massive is 63 pips in this occasion because the other daily candles are pretty small. Yeah, like 35. So this is a pretty big candle. I do like to not engage on the next day after a big candle because it tends to either retrace lower or it can consolidate during the day. But this could definitely be a play. Why? Because we're having an order block here, and I kind of need to cross-reference the cracking correlation. So let me see if I can pull up AUD CAD, because now we have both CAD pairs in here, right? And now we use NZD and AUD for that cracking correlation to see if that's a high probability. So let's go to the daily. Let me remove all these annotations. Okay, so we definitely have a cracking correlation because we took out these lows here on NZD CAD, which are these lows down here. So this low here took out these lows, and this low is this low. So we're basically having something like this, and then like this. So we have a cracking correlation in a key level, which makes me believe it's more likely to trade higher. And I do believe the Canadian dollar is also a little bit weak because GBP CAD and Euro CAD are also trading higher. So there's kind of a correlation in my mind right now because I know I've seen that before last week as well. So I would definitely only look for a buy setup. Now, if I go to the 4 hour, now I need to see what kind of structure am I working with. Right, so we definitely have a change in the state of delivery, which means we're disrespecting bearish arrays, which means these are places where price should go bearish from. And it looked like it went bearish here, and then it broke through it. So we have an area over here, which is disrespected, which can be used again as a support level. So that's how we want to use it. Let me make this blue. What kind of range am I working with? Do I want to buy right here? Probably not, because it's a little bit high up in this price leg up. So I draw out my premium and discount, which is these levels over here. So now I have my 4 hour range. And because it's the start of the week, I want to see the weekly candle trade lower first and then go higher later in the week. Let's see. Is it logical, though, that we go lower first? Now, we just looked at the daily, and there's a lot of this candle that has not been filled in by the next candle. So that can still trade lower and then rebalance this big candle. So it makes sense that it can trade lower a little bit. So what I would do is I would typically put an alert right around the 50% level, so I know it will hit the discount. As it has not hit right now, I would not be interested in buying it. And you could even, if you're a scalper, you could even short it down into this area. But that would be against higher time frame order flow, which I don't like to do typically. But yeah, I would like to see this go lower first, and then would look for a potential buy setup once you reach below this area over here. And then, like I outlined earlier, we disrespected this 4-hour fair value gap, which also has a breaker block attached to it. So you can use these two up close candles here as a breaker block. Right, let me make this one green. Right, so this is a breaker. Now this one is in discount, so if I would expect price to go up, it should be from here. And at the deepest, it should not exceed this one. So this would be my key area where I would want to look for buys. So hopefully you're not in long-term sales or something, because for me that would not make sense. But obviously I can be wrong as well. So, but this is how I would.
Yeah, that's awesome. And I think I definitely look at I definitely have a similar idea here. And what's interesting is I'm actually in a short based on what you talked about. You know, if you're looking for a scalp down to these levels, so basically you look at that 4-hour you have to the left. That 4-hour bearish engulfing candle is my entry trigger, and the area that at the top, the top one,
for a short,
that's my entry trigger, and I got in on the top of the current candle, like the almost the top of that wick, and then stop loss above, and my TP is your green zone, that breaker level right there.
Yeah, I would say that makes sense. Yeah,
and at that point I would probably start looking for longs based on that analysis that you just made as well. So that's very, very interesting. I like the idea that you looked at the monthly. You went for all the way from the monthly and down to the lower time frames. That's definitely interesting.
Yeah, a higher time frame is king always. Yeah. Yes, sir.
Tom, there's someone asking, is there something about Monday being the low of the week? Are you expecting that, or doesn't the day of the week doesn't play into your analysis or your probabilities?
Yeah, it does. And the thing is, I like to see like a Tuesday low of the week most of the time, because I want to see Monday consolidate and then Tuesday dip lower and then manipulate, and then that would be the low of the week. But if Monday hits a higher time frame key level, you can have Monday low of the week as well. It does not necessarily have to be Tuesday or Wednesday. And I think somebody in my Discord also gathered some data on Euro USD, and it was like 70 or 60% of the time Monday made low of the week or high of the week. So it does happen a lot that the low or the high of the week happens on a Monday already.
Yeah, I remember when I went through my journal, I looked at the Mondays being my least profitable days. I traded a little bit different when I did that analysis, but back then I had a win rate of 20% on Mondays, but on Fridays I had Fridays were probably my best days, and I had the same idea. Looking at price action, it feels like Mondays are fake moves. You have like one push on Monday, and then it starts kind of reversing throughout the week. And I think I've seen a lot of ICT traders actually talk about how they're not trading Mondays.
Yeah, because ICT, especially if you're trading which we call one shot, one kill, that's just one trade for the week, and that catches the entire weekly expansion. You kind of want to see what Monday does first, because we're trading a weekly candles expansion. So how likely is it that Monday is going to push in one go and then finish off the entire weekly range, right? That is typically not the case. So it's okay to wait on a Monday, see what it does first. If it does something you like it's creating a bearish or a bullish area where you want to buy or sell from, then you have something to work with, right? Price won't move. This is the FOMO thing as well, right? Because people want to get in the market as soon as the market opens. If you are that person, don't do that, please, because
Yeah,
you
I'm
will
definitely
not
that
be
person.
profitable. You need to
I
chill
am
out.
definitely that person.
Oh, I didn't want to call you out, but I don't like that. I don't like that at all, because you need to be patient. It's very important to be patient. And only time
Oh,
I
yeah.
take losses is when I'm impatient. I try to be as patient as I can, but I do take losses as well. And most of the time is because I enter too early, or I think something will happen, because I feel like, because I am knowledgeable about a lot of times where price will go, that I will just, my ego takes over, and then the market will humble me real fast. So it's actually a good thing that they do that.
Yeah, I mean, how often do we make money from over trading? You know, not very often. How often do we like? How many people have gotten rich being impatient in trading? Well, probably one of those who got lucky. You know, so I think it's very very important to stay patient. Wait for the right opportunity, and have the, and also when you have that over top line analysis that you just did, you look at the you look at the monthly and the weekly, and you're looking at the high time frames. It's much easier because you have an idea of where is the higher time frames going and what's the direction. So you have that high time frame bias, which makes it easier for you to wait for price to actually move towards those levels and not get caught up in the low time frame noise.
Exactly. Just wait for a key level, and then your market structure, and then go with it. If you're trading in the middle of the range somewhere, it makes no sense.
Yeah.
Except for the OTE, Tom, what other specific entry models do you use?
I use something I call time frame alignment, which means I will wait for all the time frames to align in the same direction. And I typically do higher time frame analysis, monthly, weekly, daily. And then I want to have a proper 4-hour structure. So I want to know, okay, I'm in a bullish structure right now, or in a bearish one. So if we use, this is like a beautiful example, of course, because that's why I took it. We have a 4-hour bullish structure. Now, I want to see the 1 hour go bullish as well. And then the 15-minute, there's an opportunity over there. Now, most of the times I trade higher time frame key level, so I don't really need a 1 hour structure to work with me. I just need to be a buyer in discount in a key level, which means we have this 4-hour range, right? And then the key level is in discount. So now I have time frame is aligned on the daily, weekly, monthly, and on the 4 hours also bullish. So now I just need to wait for price to dip back in. And what you typically want to do is wait for a change in the state of delivery, as we call it, right? That break of market structure in this case. But it can happen before a break of market structure as well, because this is a high. So this is break of market structure if we close above. But we could also do a change in the state of delivery before this high, because we might have a set of down close candles before a swing high, and then we trade above those set of down close candles, and then we can use that as an order block as well. So that the change in the state of delivery can happen earlier than a break of structure. That's what some ICT traders typically confuse with market structure shift or a change in the state of delivery. But I love to see a change in the state of delivery. That makes more sense, because a market structure shift can also be price just reaching back into an area where it wants to sell off again, right? But if it's happening down in discount in the lowest part of the range, then you have a change in the state of delivery, like this one over here, then I would like to enter another position over here. I did not enter another one over here because I already had full risk on. So kind of have to stay with proper risk management. Don't want to over leverage. So yeah, that's basically what kind of the checklist is.
We're going to do a few questions, because I know there's a lot of questions here for Tom. Can these concepts be applied to indices as well?
Yes, but I am not trading indices myself, so I cannot really say with backed up data in my own journal. Like I can say with high conviction, this type of trading I do with Forex works on indices, but it should, because it's all the same concepts. And ICT is an indices trader himself, so, and that's the concepts are from him. So I would say yes, but I cannot explain them properly, in my opinion.
I think looking at price action through indices and Forex, they're very similar. You got the same type of break and retest going on. So I think I'm trading indices the same way as trading Forex. I think it's very possible, especially if you look at, now that I know what a fair value gap is, for example. I think it's very similar.
Yeah.
Obviously, I do think that certain assets have their own nuances, a little bit of their own kind of character. That's what I feel. Some people just think that's absolute BS, but I do
No, I
feel
think, yeah.
like
I agree,
for instance,
absolutely.
Bitcoin and gold, they
do.
love to take everybody out before they actually make
Yeah.
make a move. They just like to really churn up liquidity just to make
It's like-
everybody feel like
Yeah, like
the world
Bitcoin is
gonna
just
end and
break,
then-
never retest. That's its style. It's like you try to break and retest on Bitcoin. It's like you're gonna be waiting around a long time.
yeah,
three
just
months of
break and go.
consolidation, and then
Yeah.
whoosh.
Wow, man, big time. But what else have we got? What about on gold? Do you trade any kind of gold, Tom, or anything like that, or do you just stick to majors and then cross majors and things like that?
I do trade gold sometimes, but it has to really line up like clean, because if I look at gold right now, let me see, because I was actually looking for a short on gold last week, but it never formed, unfortunately, because I would have preferred. Actually, I looked for silver, because we had a breaker here, and I wanted to sell from here, but we never got a reaction of this level, so it just used this level again as another push up. But yeah, I have only one example really, which I thought was clean, and I also broke this one down in the interview I did with Jonathan. That this whole structure over here, like perfect premium and discount levels, yes, then I wanna look for it. But if I look at it right now, let's see where we are.
You basically trade anything that shows your kind of setup. That's basically
If the market structure is clean and everything, and the higher time frame lines up, I'm all for it. And I do like to short metals when DXY is also bullish, and which is not the case currently, because DXY is going bearish, which makes sense that the metals are going up. But yeah, definitely, I don't really like commodities, not gonna lie. Same as indices.
Yeah, fair enough. Perfect. Has anybody got any other questions before we go on a quick 10-minute break, and then obviously we'll get into some more live trading, and we'll let OTE go. Are there going to be any giveaways? We were looking at doing different types of giveaways. We'll get back to everybody once we start doing that. What have we got here? Is it?
I mean, there's one question about midnight opening price. I can answer that one.
Yeah,
and
let's
then
go. Let's go with that one.
No,
Let's take that as the last.
I'm like, yeah, that's a.
And
really
then I will
good
fly
one.
away. Okay, so let me
Midnight
break
open
down. We can use Euro CHF on this one. Right, in New York midnight opening price, ICT explains this one as true day open. So this is actually where the algorithm starts trading his day, not at 5 p.m. EST, but at New York midnight. We use New York midnight so we can see what price does first. If it manipulates below that New York midnight price opening, it could be a manipulation, because we typically want to buy below that midnight opening price. And you use the midnight opening price for your daily profiles. There are a ton of daily profiles. I can just pull it up real quick. I have them over here, if I'm not mistaken. But if you just look at this chart over here, I put down classic buy day, right? Okay, I've got them over here. Right, so over here we've got all the daily profiles we can use. Today is a ICT classic buy day template, which means this is New York midnight open. This is the opening price on the template, which I use at 12 a.m. Price dips below it, makes low of the day, and then the entire day will be an expansion. This is a classic buy day. You can also use it as a classic sell day, which means the price will trade above New York midnight open and then continues down the rest of the day. Right. So for me personally, we're definitely in a classic buy day profile today. I cannot see this go down today, or at least not below this low anymore. There are certain profiles like an ICT range to New York open London close rally, which means London session will consolidate in its entirety, and then it will fake out the sellers first and then push up price, right? So they fake out the sellers because it looks like a breakout, and then they push it in the right direction. But I typically only want to trade ICT classic buy day or sell day template, because that is just perfect, because you have a consolidation before, which is most of the time during Asia. And then we have a manipulation phase during a London session, and then the distribution will happen the rest of the day. So it's very easy to trade this daily template. And then London swing to New York open, London close reversal is also a nice one to trade because you have a manipulation below. And then during New York session, you will hit a higher time frame key level. So let's say the daily fair value gap where I took the buy on GBP CHF. Let's say London session traded up first, and then New York session hits that key level. Now we have a New York session reversal profile because it's more likely to trade higher, just like here. Only this key level hits during New York session. So use those templates if you're using ICT concepts to figure out, okay, what kind of day am I in? And does it make sense that we're going to go down? And it also helps you holding on to your trade a lot longer because I'm still in a Euro CHF and GBP CHF buy on my other accounts, and I will continue to hold because it makes no sense to go down, right? And based on the daily templates. So yeah, that's it.
Good stuff. Perfect. Guys, we're going to go and
Nice,
have...
man.
Sorry, Victor.
All right.
No,
That's me. That's me, Alex. Oh, wait, Victor, you want to say something?
No. I said good stuff indeed.
All right.
Indeed.
Yes.
That's what you were indeed.
All right.
Okay.
OT Trader, Tom, I would like to thank you a bunch for coming on here and talking about these ICT comms. Very, very interesting. And I see that our comments are just exploding when you're on. The viewers are absolutely loving your content right here. And I would recommend you all watching this, go into the description of this video, and you will have a link for where you can follow Tom on YouTube and Twitter. And also, you do have a community, isn't that right?
Yeah, I have a private Discord, so where I break down price action before it happens. So let's say this GBP CHF move, before it even traded back into this area, we already called the level that this is the buy area. And I explained to my group that once we trade above this fair value gap, we are on buy side of the curve. So the low of the day should be set as well. And then after we closed above this one, I outlined this beforehand. I do this with the MMXM trader. A lot of you guys probably know him. I can just show a little screenshot over here, right? Over here, this is how I called it. Good morning, we're looking at GBP CHF, Euro CHF, and this is the key level. And if we trade like this, we're on buy side of the curve. And yeah, I let the execution up to those members themselves because you need to build the confidence yourself. So I'm not a signal service. If you're looking for that, don't come into my group, please. Yeah, you can just follow my Telegram. There's a link if you want to sign up on the community. You can sign up over there. And yeah, thanks for letting me have a shout out on my community. I'm very proud of all my members because there are some beasts in there as well. So yes, thank you a lot, guys.
Yeah, I've been seeing it. Lots of good comments from your students and your members, and some very good results from them as well. It seems like you have quite a few funded students actually. So very, I mean that's a good example of it really shows that what you're doing, the way you're teaching, actually works in the real market.
Yeah.
All right, man. Thanks for coming on. We're going to take a quick 10-minute break. And when we're back, we're going to get on to the actual live trading. We have a few positions open, so it's going to be quite interesting to see how all of that turns out. All right. Take care, guys. See you in 10 minutes.
Peace.
See you later, Tom. Bye.
Bye.
Bye. Thank you.
So I'm going to press button.
Right.
Oh God, we've got to sort those. There you
Yeah,
go.
we need to take care of the layouts.
Yeah, man. Okay, that was. I learned something from that.
Yeah,
I learned
me too.
something. We should
That was really good.
bring different types of traders on to give us,
Yep.
give us all the secrets, and then we will know everything. Just there is to
Definitely.
trading. That is just how it's done. But no, Tom is a really good technical trader. It's great to have him on.
Yeah, that was a
Indeed.
great session.
Let's see what's going on. I'll tell you what, that trade, one thing that I really have to do better is picking the definitely a pair that is actually moving, because USD against CHF is just not moving. And Bitcoin. Bitcoin had that's a nice push up though. Probably left a lot of traders behind that shorting out. That's crazy. Think of how many traders are just shorting down in these areas, break, retest, continuation. Everybody's short here. Now they're offside. Oof, bad place to be if you're trading and shorting Bitcoin.
Got a very nice.
This is ridiculous.
Got in a very nice position. I bought, started buying up. I got on this wick right here. I started adding to both Bitcoin and Ethereum, and right now I'm looking at the break and retest of this 4-hour W right here. I think that's going to be an interesting trade for Bitcoin, and Ethereum is basically looking exactly the same as the break and retest here of that level is what I'm looking at. CAD JPY has been I was looking at a trade here on CAD JPY, but this price action here, if you look at the 50-minute, this is just crazy. You have the initial, you'll see that you came down, looks like you bounced on, this area here. So initial reaction, nice. And then you're straight down. Not sure if this is news driven or whatever, but glad I didn't get in on that one. I'll have to wait to see if we do get a reaction down here. I would love to see a move like this, perhaps, before getting in on that one. I'm still in NCD CAD, thinking, I want to see that move to downside. I like the fact that we had that 4-hour candle close as a bearish engulfing, and then we had that sort of like you see that this candle here rejected that level right there. So if you make that a little bit bigger, you'll see that it's a break and retest of that level right there. Now, of course, if we start reclaiming this level, then I'm probably going to get out of the trade. But I do see a clean. There's lots of room here. It's basically the retrace of that breakout that I'm looking to trade. I had a massive move up here, and now I'm looking to take that lower, because this is what this is the problem with Monday trades, right? You'll see if you're looking for a target down here, what I'm expecting is for this to just move just a little bit lower and then start retracing. Because like Tom talked about as well, a lot of the Monday moves are, I think he said that's where the low of the day or low of the week or high of the week is being put in.
It's funny because that's not, and I'm not going off, obviously, not saying what he said is different, but when I've gone through and I did all that for the last year, all the checking of what happened, I actually noticed that Monday's range was over 50% of the time getting taken out on a Tuesday. And if let's say a low is getting taken out on a Tuesday, then it would actually then go and try and take out the high. And if it didn't take the high out on the same Tuesday, then the Wednesday would then take the high. And then from there, obviously, what Thursday and Friday do, if it's consolidation or continuation. Now, I saw that happen, 50 to 58%. I could see if I could just bring it up on screen to see what they actually are.
So basically, what you mean is that the Tuesdays retrace the Monday move.
No, so Monday would have
No.
Monday's range would get taken out on a Tuesday. And if one of the levels got taken out on a Tuesday, let's say a Monday low got taken out on a Tuesday, then it would push up to go towards to take out the other side of the Monday range, either on the same Tuesday or on the Wednesday. And I saw that happening. A Monday's low or high getting taken out on a Tuesday like 58% of the time, which is pretty, that's a lot.
Yeah, that's a good number, especially not when especially when you haven't even taken in consideration, to actually trade that. If you add some indicators and something, onto that to select some of those occurrences where there's a higher edge, you might get pretty good edge on that.
So that's what we traded here last week. Sorry, Victor. I'll just do the trade exactly what we traded that using that information last week. So we had Monday, Tuesday took out the low. Obviously, we had the confluence of the weekly open, and we obviously had, the remaining part of that gap. So maybe, obviously it wasn't just to take out this low, it was to obviously retest the weekly before continuating up. So it's taken out this low on Monday. It hasn't gone to take out the rest of that range, but Wednesday's come and it's taken it out. And let's have a look at another one. So that was Monday, Friday, Thursday, Wednesday, Tuesday. So this was Monday. So Monday's low was down here. It didn't actually get hit. So the range would have been there. You had the high. High never actually got taken out, but you can see it came up here and then obviously distributed to stay in the same range as Monday. So that's not a really good example. So that was Monday, Friday, Tuesday. There you go. So you've got a Monday low, then you've got the Monday high. Monday high was taken out by Tuesday. Then you obviously, this is Tuesday, Wednesday, nothing really happened, and it got taken out, the weekend after. But really go in and have a look at these things, and you will start to see that, Monday's high or lows really do get taken out most of the time on Tuesday.
Guys, sorry, Victor, before we jump in, I need to cover this because we've just talked about CAD JPY in the beginning. So you guys remember I talked about how it's all messy. There's a lot of volatility, and from nowhere you have this move. Look at the 15 minute. The 15 minutes is now reclaiming that 0.618. Look at the 1 hour, possible pin bar forming, but it's in 40 minutes. 4 hour, very nice reaction to that 0.618. So now I'm thinking, how can I trade this, and when can I trade this? So I got different options here. Either I wait for the 15-minute candle. If it closes as a bullish engulfing candle, that would be one trigger. But obviously, when looking at entry triggers, the higher the time frame is, the better. Okay, so the better confirmation, obviously. So if I wait for the 1 hour candle, the 1 hour is going to close when we end the live stream. If I'm able to get in on, let's say, somewhere around here, have a stop loss here, I can actually take it up to just these highs right here for a 1 hour trade. And that's something I'm looking at right now on CAD JPY. So we'll see how price action develops throughout the hour here to see if we can find a trade on that 1 hour close. All right, Victor, now finally, what were you saying?
No, I wanted to say something about three subjects behind. What Tom said was that on Mondays you have consolidations. When you have consolidation, on Tuesday it's being one side is being broken, and then it goes to the deliver price, as he mentioned, or expansion of the week comes in the other direction. So you get faked out with that break of Monday's consolidation first, and then it turns around and goes to the other way for the rest of the week, which is similar, only in another time frame, what Yannis showed us, where you have the Asian range, right? Not the Monday.
Yeah, that's right. I remember that. Yeah.
And it takes out one side first and then goes to the other in the other direction for the rest of the session or the rest of the day. So there's that pattern that is not only visible or not only follow on the week of the day of the week, but also on different sessions, Asian, London, New York. So that's very interesting. I think very useful information for other people to see, because you can see those patterns, and maybe you can find those patterns in other moments as well, not only on the day of the week and the sessions, but maybe in other time frames. And I think that's it's about the concept, right? That it shows you a range, establishes a range first, takes it out, traps traders in one side, and then goes to the other side. Or people who call that, getting liquidity, then to go deliver price to the other side, in the other direction.
Yeah,
that's
a lot of.
Yeah, there's someone in the chat that asked us if we could look at Euro Pound, and I will show that chart. Here we are. If we look at the monthly, I can see only bearish structures being formed. So that's already something that should be forefront on your analysis, that the market is forming only bearish structures, and the one bullish structure that it had a couple of months ago, it broke it, right? So this is for certain the direction it wants to go is lower on the higher time frames. If you look at the weekly, what do we see? We see the same kind of story, right? It forms bearish order blocks, right? This is the last, not the last one, but it had one before. This is the weekly. Let me get that straight. This structure, right? We had those structures where it forms bearish order block continuously, telling you the same story it tells us on the monthly, right? And so there's no, in the last couple of weeks, it hasn't been able to close anything bullish on the weekly. That's another sign, right? So it's predominantly bearish. So if you want to go with the trend, that is the trend. That is where it's more likely to continue to go, unless it shows us another direction. And if you go to the daily, we had a gap at least in this price feed, we had a gap that was filled, right? As it was filled, this gap was filled, and then just continues to the downside. If you see that, you can see that after it filled that gap, formed another bearish order block on the daily. So it looks very, very bearish. There is one order block here that was formed, but it has very little effect on price action, right? That's another sign. This bar hasn't closed yet, but this gap, as it opened lower, tells you that this order block wasn't relevant at all. It hasn't closed this bar, so it's technically not invalidated. But I mean, it's so squeezed, seems so irrelevant. So that's something we could be considering. If you look at market structures, you can see how price is pushing, consolidates, pushing again, and this is a retracement. It seems like it comes back to fill that gap and just to continue lower. There's not much in terms of reversal pattern. If you look at this, even on the lower time frames, there isn't a lot to go by. There is that order block, of course, but I mean, it's an H4, and you typically want to be taking these trades with the higher time frame supporting your view, right? So this is a low probability area for it to bounce because of the higher time frame, but it is an order block. So if it does come in there, I mean, if you get more confluence, maybe the daily closing as a bullish and comes back to retest that daily order block, then this may become something interesting. Other than that, I don't see anything we should be looking to be buying here. But what we do have is on the daily, we did leave a order block behind. It was not even able to reach that, to retest that, and it moved away. This is already the fourth candle. If it comes back to retest this, that could be a sell entry for a continuation to move. But it seems like it's with that gap, we open lower today, which is, of course, has to do with the French the results of the French election. It's probably, that opportunity is no longer there. So that's my take on Euro Pound. In terms of euro dollar, let's see. Let's go over that. We are reacting from that monthly order block that was formed. So in that sense, we are. You could say we are. We are responding as we would expect from that order block. But on the other time frames, or not other time frame, if you go more in the past, we have a bearish accumulation of structures, right? So normally you will say this order block is not likely to hold for very long, but even so, it can push price higher, because in the end it's still valid, and it's doing what it's supposed to be doing, right? It's a demand area which typically pushes price higher. So that is okay. I mean, that is according to the plan, if you will. We had a weekly demand area that was formed, right? And price never or hasn't come back to it yet. And that's a good that would have been a good entry, and it still could be a good entry to be going long from, based on that monthly order block. However, since we are already moving out of this order block, right? This is, the more it moves away from this monthly order block, the more likely that it is that it is already doing that move that you would be expecting on the weekly, right? This move that it is moving right now, which is very impulsive, it may not. The further away it goes, the less likely it is to come back and reverse from that same point, right? So that's something to think of. The other consideration we might have is the we are coming back into a weekly order block, right? On the other side, right? So it went from one station, from the weekly to the next weekly in the opposite direction. That is typical how price normally moves, right? That is, it goes from one order block to the other one in the opposite direction in the same time frame. And it is in my sense, or in my understanding, this would be, unless we have anything else, this is what I would be expecting, unless one of them breaks down, either the weekly, the bearish, or the bullish one. Other than that, let's see what we have. We do have a monthly above here, which has already been retested a couple of times. So that we will have supply coming in from that order block, but it's quite wide, so doesn't help us very much. What else do we have? So we do have a fresh weekly, and if we go to the daily, I don't see, there is this wide order block, right? But it hasn't proved so far any kind of supply for price, right? Price has been going very nicely and continue to go, and this is quite wide compared to the other daily time frames. So this is not something you want to be using, and it's not fresh anymore. Many reasons. So I have multiple reasons not to use that. The next station that I have, or the next stop for price, would be this order block, right? Which is neatly within that weekly, which also overlaps with the monthly. That's where I would like to see price go before start considering going shorts. There is on the H4, or there is a area right here, which is a reversal area, but you have to be listening to price action, reading the tape, and not just going short because there is an order block there. One of the things we can, for example, see is that, what do we see? We see price coming back into this H4, right? This is the H4 quasi. Let me point at why I see there a quasi there. We have that. We have this. This is the structure, right? And it breaks that left shoulder, and then does this, but it's not finished. And comes another time, right? This structure, this reversal pattern is still valid to be reversing from this point. However, that's why I stress to go to the lower time frames to read price what it wants to do. If you go to the lower time frames, let's say from the H4, it's not giving us signs that it wants to reverse, right? It's forming outside bars, bullish ones, right? It did have a bearish one, but it just got invalidated here. And you had an early sign, which was this outside bar being formed right at the moment it should be going bearish. That doesn't make sense. If it's going to go bearish, it's going to transition to go a short. It shouldn't be forming bullish structures, and for sure not outside bar. So that's the market telling us it's not ready. This is not, at least not right now, to be reversing going short. That supports the idea that perhaps it needs something else for the reversal. We don't know that. We'll have to see in future, in the rest of the day, maybe tomorrow, see how things go. There is an area here, but it's not very high probability, since you don't have price action in the H4 telling you that it wants to reverse from here. So that's what I have for EU for today, or at least for right now.
Yeah,
My
How
trade-
about you,
My
Jonathan?
trade is getting smashed at the moment. It had a lot of consolidation, and now it looks like
I
it's
entered
breaking
a,
down through consolidation.
I entered
Carry
the
on.
long here, like right before Victor started analyzing that Euro GBP. So you got a break. I'll show you here. So we got, now this was the idea, right? I wanted to, from the weekend, I wanted to take it lower. I wanted to go long somewhere here. But what I did like here was, I used really like this structure that we had. You know, we had obviously had a very strong move to the upside. It's quite a strong uptrend on the higher time frames, and we had this structure here with the last candle is a 4-hour bullish engulfing candle, and it's breaking above this low time frame resistance area. We have a 1-hour candle closing above, confirming the retest. Confirming the breakout. And then when we look at the 15 minutes, we'll see that it's a quite clean trend here as well. We got that resistance, rejection, breakout, and then break and retest of that 1-hour level. And I'm just looking to take it up to this level right here. Now, this is a trade that obviously goes with the idea of being short NCD CAD. So this is basically a short on NCD as well, but a long on AUD NCD, if that makes sense. So they're correlated to each other. So I got a AUD NCD long, and then this NCD CAD short. And of course, when they're correlated, I'm risking half of what I normally risk on both of these. So in terms of risk, it's the same trade. It's the same amount that I'm risking. But I quite like this retest right here. Let's see if we can close this. We just closed the 5-minute candle. A very, very strong reaction to that level, obviously. And it kind of looks like it wants to break out higher. Looking at my TP, it's going to be based on this area here. Looking at. So right now, it's sort of a break of structure type of trade, where you have one move to the downside, then you start to form this type of structure right here. So the break of structure. Other than that, I feel like I already took 2 trades today, and I feel good about that. I feel good about these trades. Didn't really feel, like always when I enter a trade, I try to ask myself, like, am I in the right state of mind? Am I balanced mentally? And if I start trading more, if I start getting into more positions, I'll probably find myself in the same situation as I did last Monday when I had 5 trades open at the same time. Now, they all went well, and I made quite a lot of money last Monday, but I want to make sure that I'm not thinking too much of the profits. I'm thinking more in terms of, only find the very best setups and the very best trades. And if I'm going to be honest, this is not the best trade. It's good enough, because it's sort of a break and retest at that level, right? So it's good enough. It's some type of break and retest in an uptrend, but it's not perfect. Looking at NCD CAD, it's pretty good. I would say it's good. It's definitely a trade that I could take. But I've went through the market and I can't really find any perfect trade, which means if I take a trade in the next hour, it's not going to be perfect.
We'll go through a couple of couple of charts because I know people are looking at. Let's have a look at gold. What's going on at the moment with the USD CHF? Nothing. It is exactly at the same place. It's a little bit of a late entry, so obviously I've got to eat up all the drawdown where the entry should have been on the top of this level. That is what you get when you're impatient. Let's have a look at euro, because I know a lot of people have been looking at this. Obviously, you've got this, you got that level there. Everybody's been taken out from this session. Now you've got New York. See what that's quite big. You see, there's a lot in these candles. If you have a look at these candles, we've got, less volume, less volume, less volume. It's taking a lot of candles just to get 4 pips. You've had 10 bars just to get 4 pips. Whereas you see, we're starting to get now more volume coming in, which is now to the opposite side. Just one candle is just taking up the whole volume that it took 10 candles to do. So that is kind of a sign of maybe there's a shift in what price wants to do. Again, are you going to take a short from right up here? Probably not, because you're still in quite a bullish market structure, and the Dixie is bearish at the moment. Pound, well, there's nothing really to say. It is just just flying up. So there's nothing really to say about that. Obviously, you've got gold right here. There was a really nice trade opportunity here. I actually, on a different account, I actually scratched this because I was like, you know what, I'm over leveraged on this. I actually scratched this here. So I saw price come down, then it got to this level, and then it pushed up. I was like, you know what, I'm just taking this out, and it actually moved and pushed down. The reasoning for that, why I actually looked at getting into this position, is price was already breaking down from this area here. We had this nice push-up candle, a little bit of divergence on the lower time frame, and then obviously you had the 200 EMA here, which just coincides with like all of this consolidation as well. So gold, if we look on the daily, get rid of this. We've been trading this for the last 2 weeks, really. We had trades coming into this area. We also had trades in this area. And to be honest, I didn't think it was going to go to the top of that range, to be honest. What did you guys think? I thought it was actually going to come back down to the bottom of the range. It was going to break, retest, then continuation down to this area of demand right here. Just didn't actually happen. So
it's good that now that we're on the subject of gold, because we are getting some questions about why we're not trading gold, why we're not looking at gold as much. I would say we're looking at gold every live stream, I would say, and we're trading gold when there's a setup forming on gold. The problem with gold is people love it and hate it for the same reason, and that is volatility. It's very volatile, and it moves. It's like, it really likes to hunt for stop losses. It really likes that stop loss. I mean, look at that wick on Alex screen right there, that big wick right there that right in the middle right there is a big wick. Taking out all those stop losses. Like, that was NFP, taking out the scalp. Yeah, okay, so let's rewind that.
Forget that.
Let's forget that. But it's actually a fairly good example of what gold is looking like, but on like a smaller
but even on, I guess, even the fact that it's NFP, if you look at other pairs, when NFP, the spread widens and it gives you a wick, but a wick is much more exaggerated on gold. If you compare that to what it did on EU, we had, I think, if I'm not mistaken, what was it? Maybe 10 pips, 20 pips of a wick below before it moved up. And if you look at gold, it's
wick. Let's have a look. I've got the wick on my screen now, right there. Where is it?
Maybe that was the could have been the weekend open also, right? It
was 26 pip, the wick, which is almost half. You got 30?
Same thing, basically, yeah. Yeah, the wick took all of this out. So it actually reached, it's from here to, all the wick from, it's quite a big area.
But that's NFP. That's why we don't trade NFP. Not even as a swing trader do you want to have positions in NFP events, or at least not entering them around that NFP. It looks like I might have that NCD CAD. No, I'm a little bit mistaken on that, but it does look like my AD NCD trade just needs another quick push to the upside, and we'll see that profit getting hit. We are also seeing if I can bring my screen. No, you know what? I'm not going to talk about that because we're talking about gold. That's right. We're talking about gold.
Actually, I got
remember
something to show on gold. I think something. I've got something to show. Something significant happened at the close of last week. Before we have analyzed this regularly, and every time I've said that we have the same as with the other pair that I showed, which was EU, that we have accumulation of bearish structures being formed, and we have the last one was an outside bar. And I remember said that, that tells me, that's screaming that, the sellers are coming in because they're taking over. They're not doing it just by forming bearish structures, but they're doing it by forming outside bars, which is even stronger than just irregular engulfing. So, but the thing is, how did price, if that narrative is, has validity, it should start to accelerate to the downside, right? As long as it's following the script, you can follow the same plan. Okay, this is bearish, but what did it do after forming that outside bar? I'm referring to this order block, right, which was formed by this outside bar, that little bar, and this bigger one that went above the wick, above the range, and close below it, right? That's the outside bar. So typically what it would do after that, it will come back into that order block that it showed and should move away from it, right? So it should do this. That is the plan based on that very powerful outside bar. But what did it do? It did not. The price action never. It did not do that. Not only that, it invalidated by that close on the weekly. It invalidated an outside bar on the weekly. That is quite significant. Normally, it comes back and it moves forcefully away from that order block. But instead of doing that, it closes now and invalidates it. And I think that may be the beginning of a new move. I know it doesn't make sense, perhaps, but I don't. This is just what the price is telling me. If it is breaking this order block is no longer there, right? Because it's invalidated, and even all these dailies are no longer there. So what does that tell us? That it's shift very forcefully, very abruptly from very bearish to not very bullish, but not so bearish anymore. And actually, what we then have is the weekly order block that was formed, which I thought it was not going to stop price. What did price do? Price went back into it and moved outside of it, breaking those bearish structures. So we are back. To me, we're back bullish. My bias is not bullish on gold. So I want to be waiting for price to come back into some structure below us, right, for demand. And then it probably not this weekly, because this weekly was already tested, but some other structure maybe in the future it will show us. It hasn't shown us yet. Let's go to the daily. What do we have? And we did have that reversal pattern that I mentioned that I didn't like at all, the daily, right? That quasi that I didn't like because it was at the end of a bullish move, which was this bullish move, which is not a good factor for high reversal, high probability reversal. But it went into that order block and is showing a lot of bullishness. So my guess is it's going to continue probably doing that until it starts forming bearish structures again. And if we see the same quasi, I can see I did not do this since I don't trade quasi. I don't trade gold. Let's see. We have this would be the structure, and we have now these are within the range, right, between this range. So I don't count them as swing points. And now we have broken the neckline again on a second quasi based on top of the first one. So now this area, this D1 order block, they become entry order block for the move out, right? So now this becomes like so. You can see that, right?
Yeah, I can see it coming down. Look, we're at the top. We're at the top of range. You know, so trade the range until it's broken.
Now this. This becomes an entry order block on the daily. So this is a fresh setup. The first one was this daily, which already did what it was meant to do. I no longer see that, so I can actually take it off. And this is now the structure on the daily that I'm looking for. If it's going to come back, it needs to do reversal patterns on the lower time frames after it touches it, after it taps into that order block, which is also on a weekly, but I wouldn't be trading it based on the weekly, just on the quasi on the daily. And as you can see, the quasi doesn't look very symmetrical. That's why I don't say head and shoulder, but just quasi, because it's a lot of the time it doesn't look pretty, but it works. So yeah, that's something significant that I wanted to show. And of course, you can go to the lower time frames, let's say the 4 hour, and refine that entry, because this is quite big still. So you can be looking for other structures that you might find. And if you do this, right, you can find another structure here. Although I don't like that. I would like to have the head always on the lowest point, right? So it will be something much bigger. I'll have to analyze if it's valid or not according to my rules on the H4, but you could be going to the lower time frames and find your entry in here for that move up, which may or may not come. But if it does get there and starts reversing, then we're back in business and we can get in a move higher, and it will be retesting probably this high or maybe that all-time high, which would be a great entry if we're able to catch that.
Yeah, let me take a look at gold. I think I definitely agree with that analysis. I am looking at something similar here. So you probably remember a while back I talked about how gold is trading within this range, and I would be looking for break and retest of the range EQ for a move up towards the range high area. And right now we closed Friday's candle. We closed above the range EQ, so we have a breakout, and it looks like we have now reclaimed the middle of the range. And if we go down to the 4 hour, we do have a clean retest almost happening here. So let's see if I can change this. TradingView has a cool thing where I'm sure most of you already know this, but if you go into visibility, you can select what time frames you want this to be shown on. So if I only want this on the daily and higher, I can remove this, and then I can make a new level on the 4 hour, which would be based on, perhaps, I think I would place it like this, and then the visibility on this would be only 4 hour and lower. So if I go to the daily, it's going to be that daily zone, and if I then go to the 4 hour, it's only going to be that 4 hour horizontal. But this is basically what I'm looking at. I'm going to be ignoring that wick because that is, I believe, NFP. So I'm only going to be looking at that low wick right there to put the fibs on. Because sometimes I ignore the wicks caused by price action like this based on news, because it's not, I don't see it as part of the, exactly, it's
an
artifact or deviation or whatever. But
it's not normal. It's not normal market condition, and it can go to extremes which do not really represent how market normally works. It's an extreme of cases.
Yeah. So what I'm looking at here on the 4 hour is I got the reload zone here. Might have to rename this to, I'm never gonna do that. But so got the reload zone here. Waiting for that retest of the reload zone or the area. And what I'd love to see here is just a break and retest, perhaps hitting that level, forming a 4 hour bullish engulfing or something like that. Just something that shows me that this is support, and price likes to use this area as support. When that happens, it's time for me to get in. Depending on where I can place a stop loss, maybe here, I can even take a trade up to just cover these highs right here. Something like that is what I'm looking at on gold. But we'll see. I mean, this if it confirms today, maybe this evening. What I've seen is if I'm taking a trade on Monday, I would rather take it in Monday evening, because I just feel like a lot of the trades that I take Monday morning has a very low success rate. I don't know why. Maybe because it's just like we've already talked about that, but I like to place it closer to the weekend. I mean the the weekend, the evening of Monday if I have to take a trade.
Yeah. There is a a very nice reaction on EU as well. Maybe I can show you guys it. We had how the price reacts to that weekly high, previous high on the previous candle on the weekly time frame. I marked that with that horizontal red line, and if we go to the lower time frames, or we go to current prices, and let's say on the 5-minute, you can see how price that was last week, right? So this is this week, and you can see how price rejects it the first time, goes over it for a few pipettes, rejects it again, forms a reversal pattern on the lower time frames, but it's not strong enough, does not break any market structure, right? So if you see this, let me get this right, it does not break any significant structure, right? The neckline was way below, and it continues. And what does it do once it gets above it, right? It reacts with these kind of candles. If you're buying that breakout, that's gonna scare you away, right? And it is at the end of this is currently close to 100% ATR, so it is looking very kind of extended, not extended, but because it hasn't reached 100%, but it is at the higher range of the daily ATR, and it is playing with that weekly previous high on the weekly, right? And after, now what I want to see is, I'll go to the lower time frames so you can see that more clearly. It seems to be playing and flirting with that level, right? God doesn't break it right away, reacts from it. Now it breaks it, reacts from the other side, but couldn't hold it. It does that for the second time around, and now it is reacting to it is reacting on the upside. So it's using it as support, right? It uses it until it breaks it again. You see how it's bouncing from both sides, using that horizontal line as flipping it from resistance to a little bit support. And in the end, you can see the last time it is now resistance again. So it will be interesting if it's no longer able to break that it's going to break down again. And it trapped everyone who bought this breakout, thinking, it's breaking the weekly, the high of the previous week, and we're going to go much, much higher. And perhaps it will. But if it doesn't, it will have trapped everyone else who bought that high or that breakout on the lower time frames. So that previous weekly high is now is at play, and prices interacting with that. And it's going to be interesting to see how it handles it. How does it close on the hourly, for example? It already closed above it, but can it keep it? That's the thing. Yes, that's what I wanted to show. On the H1, it does look very bullish, though. It has on the hourlies, it does not show any signs it wants to reverse at all. Only forming bullish even outside bars. So it looks like it wants to continue, but we'll have to see. We'll have to see if this is anything.
Yeah, we have a comment about gold flying, and I must say, if we got 1 minute till the 1 hour candle is closing, and I gotta say gold is looking quite strong here.
That's an interesting move. I would have thought it would have broke down a little bit, but again,
yeah,
you can say, is it what that's just obviously it's just playing the range. You've got a 5-minute range or 15-minute range at the moment. Is it really enough to say that it's like if you put it on a bar chart as well, let's have a look. I'm going to put it on a bar chart and let's see what it actually looks like. 'Cause it just looks like a bearish flag.
What level is that? You have a level above you. What's that? Oh, that's Victor. Okay. What's that level? It says possible entry 4 hour. Is that okay? So would you, if I take, because I'm very interested in taking a long here very soon on the close of the 1 hour candle, because obviously this,
Gold?
yeah.
Interesting.
It has been invalidated.
Okay. So what if, like, because I'm thinking about going along here up to like 2,390, just the high of that area, because what we're seeing now in the 1 hour is close. So yeah, I'm gonna probably take a long here, see what the let's look at the risk to reward here. I have. Yeah, I think I can.
I can see why you would go. It's just hit just had a break and retest of the 50 fib.
Yeah.
On the 1 hour.
I quite like it actually. I'm gonna have a fairly wide stop loss on this one to make sure that it can actually come down lower and retest that level once again. So yeah, I have gold.
Yeah, I personally don't like going long right at the top of a top of the range.
Yeah, I wouldn't recommend that either. No, I wouldn't recommend that either. I would wait for it to come back below that 50% retracement. Then you can get a good, wait for that reversal here, touching that daily, and then move out. So I wouldn't be taking it today necessarily. That H4 does look appealing, but at least if I take a long from here, I'm not going to hold it for very long. It's just going to be FTA and that's it, because I'm not getting into that area below the over the 50% retracement. If I were to hit it in that area on the beyond the, when it retraces more than 50%, then I can hold for much longer and target for targets that are much more ambitious. But not right now.
Let me show you the gold trade that I'm in right now. So this is the trade. Now the reason why I feel like, you know, a lot of times with gold, it feels like it will surprise you. Like it's going to surprise you to the upside, it'll surprise you to the downside as well. But if you see something forming and you feel like, right, there's positive, you know, you see that there's a possible volatility coming in. For me, if I have made a plan and there's a level, there's a break and retest, I know that with gold, I don't have the time to think about it too much. You know, if I've already had an idea, if I like, I can't just wait around too much. It's like with Bitcoin. If you plan to buy a breakout on Bitcoin and Bitcoin is breaking out, you better make sure that you buy that breakout, because it's gonna run. And the same happens on gold. When it starts running and it's like it decides on a target, and then it's just gonna start running to that target, or it's just gonna reverse straight away. So if you look at gold on the moves within this range, I mean, it's some quite amazing moves. And look at the daily candles. I mean, you got this one right here, you have this move here, and that one, like, and this breakout move. It's just insane volatility. Like it moves from level to level beautifully. Look at this level right here, breakout straight to that level, and then just straight down. So and then on this breakout again, you're straight up to that level, and now it's breaking out. I think it's just going to go. It's going to continue straight up. It just retests that level, right? So there's a lot to be said about gold's way to express its volatility when it comes to just hitting a level and then just continuing. When it's clean, it's very clean, but when it's messy, it's just insanely messy, you know. So when I see something clean on gold, I tend to not wait around. I want to get in, you know. I want to get in as soon as possible, because it's the clean break and retest that I like. Especially, you know, with this one right here. I mean, you broke the level here. Here's the breakout candle. We haven't retested that until we retest it right here. And then what you get is a 4 hour bearish engulfing candle, then boom, straight down. It's just when you get confirmation, the confirmations are clean. I think the next thing to happen is a fairly interesting move. So now on the one hour, we do have first we have a bullish engulfing candle. So we have put on the 50 as well. What you see is retesting the 50 right here. A 1 hour bullish engulfing candle. We can go even down to the 5 minute, and what we'll see here, let's see on the 15 minutes. Let's see, where is the high, where's the close of that daily candle? It's going to be right there. So if you go to the 15 minute, you can put a fib on that move, and you'll see that, like I talk about a lot of times, you get that double bottom and the right leg is in the reload zone. So you have this type of structure where you hit the reload zone and then you continue to the upside. So you hit that reload zone and you also hit the 50% of this area. Now, what's interesting here, it aligns with the overall idea with the daily level. So remember, we talked about, for several weeks now, I've talked about a break and retest of range GQ to range high. So I think, that's what I'm playing right now. I'm basically using my high time frame bias to get in on this trade. And when you have that high time frame bias, it's much easier to take a decision on a trade with the lower time frames. But guys, we are at 2 hours now. Is there anything you guys want to cover before we start wrapping this up?
Obviously, guys, we know there's bugs. We know there's data that is still uploading. We know that there's a lot of stuff that still needs to come onto the new hubs. Don't worry, everything is getting dealt with. Everything will be fine. Just stay patient. Obviously, your MT5 is the most important thing. That is your trading account. All the data is from MT5. So keep an eye on all your levels. Make sure you know your drawdown levels. Make sure you know your profitable days. All of that stuff is all coming from MT5. The rest will be totally fine. So that's it for me.
All right.
Yeah, I don't.
Nice.
Yeah, I don't have anything else to show that horizontal level that I'm looking at on EU to tell us, what is the intention of the market. But that is still at play. Market is interacting with it as we speak, and probably will be, who knows for how long during today. But yeah, that's it. That's it for me as well. Happy trading, everyone.
All right, guys. So tomorrow we have an interesting live stream. Tomorrow I will be breaking down this right here. I've just talked about the reload zone, and what I'm going to do prior to that live stream is I'm going to be reading up a little bit about the OTE, the optimal trade entry as well, and we'll see how is ICT using OTE and what does he teach about OTE. Is there anything we can take from that and combine into the way I'm using the reload zone? Because we've just learned today that it's basically the same thing when it comes to the Fibonacci levels, but is it the same thing when it comes to actual trading concepts? So can the things I do be applied to ICT and vice versa? We're going to be taking a look at that tomorrow, so that's going to be very interesting. All right, guys, thanks for joining today, and I hope to see you all in tomorrow's live stream. Take care.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers.